Okay, so we are moving on to exercise in Cashbook. Okay, so we are going to record some transactions in Cashbook, and we are going to record some transactions in the other ledger accounts. So we will look into what are the transactions that are available. Okay, so following transactions in Cashbook took place during the month of January in Lakshini's business, which was commenced on 1st January 2025. Okay, these transactions in the cash book, and they'll record these transactions in the cash book and relevant ledger accounts of Lakshini's business. Okay, so that is the task. Okay, so we have some transactions and we have to record them. Okay, I think you can see them below. Okay, you can see them here. So let's start. Okay, so the first date of January, capital invested 80,000. Okay, capital invested 80,000. So there, what is so we have to use cash book. Okay, and capital account. So first day transaction. Okay, I will come here. I will let this. Number one. Now capital invested 80,000. Now what is happening here? We have cash that is coming in from the capital and the capital. Now when capital increase, it's a credit. Okay, equity is increasing, so we have to credit it. When cash is increasing, okay, it's a debit. Okay, when cash is increasing, it's a debit. When capital is increasing, it's a credit. So we have to debit cash book by 8,000 and credit capital account by 80,000. So let's do the transaction. Date is 1st Jan 2025. Okay, receipt number 1. Okay, you have to record it here. Then description, capital, amount is 80,000. Okay, now we have to pass the credit entry. Okay, so date is 1st Jan 25. Okay, date is 1st Jan 25. Then description is cash. Okay, just give me a second. So we are recording the credit transaction 1st Jan 2025 cash, and amount is 80,000. Okay, so the first transaction is done. Then the second transaction is board goods for resale 45,000. Board goods for resale 45,000. Okay, second transaction, board goods for resale 45,000. Now here we have two accounts. One is cash account. Okay, and the next one is purchases account. Okay, now here what is happening is purchases is going up. Purchases is an expense. So when expense is going up, we have to debit. Okay, on the other hand, cash is coming down. Okay, cash is asset. Okay, cash is asset. So when asset is coming down, we have to credit it. So we have to debit purchases by 45,000 and we have to credit cash book by 45,000. Okay, so those are the two transactions. Okay, let's go to cash account or cash book. So we have to credit cash book 2nd Jan 2025. Payment voucher number is 001. Okay, description purchases amount is 45,000. Okay, Then we are going and creating another account for purchases, which is expense account. Okay. So we are recording date is 2nd Jan 2025. Description is cash and amount is 45,000. Okay. So we have recorded the second transaction as well. Okay. So we did the second transaction and now we are going to the third transaction. Okay. Third transaction is obtain a bank loan of rupees 50,000. Okay. Now we have cash coming in with the bank loan and the bank loan. Okay. Now cash is going up here and bank loan is also going up. Okay. Cash is going up and bank loan is also going up. Now cash is asset. Okay. Now increasing in asset is a debit. Now bank loan is a liability and increasing liability is a credit. So we have to debit cash book by 50,000 and we have to credit bank loan account by 50,000. Okay. Okay. Let's move on to the question or the ledgers. So today is 4th Jan. Okay. 4th Jan. So the receipt number is 2. I record it as bank loan. Bank loan. And I have obtained 50,000. Okay. And then we are moving on to the bank loan account. So we are recording the date as 4th Jan 2025. Description cash. Okay. And amount is 50,000. Okay. So amount is 50,000. So third transaction is also done. So we'll move on to the fourth transaction. Okay. We'll move on to fourth transaction. Fourth transaction is bought furniture for rupees 80,000. So we have furniture one hand and now we have paid in cash. So cash is one side. So here furniture balance has gone up, cash balance has gone down. Okay, you can understand it. When you buy furniture, what happens is furniture is going up and cash is going down. Okay, furniture is going up, cash is going down. Then furniture is asset. So if asset is going up, you have to debit it. On the other hand, cash is also asset. If asset is coming down, you have to credit it. So you are debiting furniture account, okay, and crediting cash account by how much? 8,000. 8,000. Okay. So what you do is now here we have to credit cash book. Okay. So date is 8th Jan 25. Voucher number is 02. Furniture. Okay. Furniture. Amount is 8,000. Okay. Now here in the furniture account, okay, so we have to debit the furniture account as furniture balance has gone up. So 8th Jan, description cash, amount is 8,000. So those are the double entries. Okay. Okay, now we are moving on to the fourth question or the fourth transaction. Okay, fourth transaction we have already completed. Okay, now we are moving on to the fifth transactions. Rent paid 6,000. Rent paid 6,000. So it's the fifth transaction. So we have two things here: rent and cash. Okay, rent and cash. Here, rent is expense. Okay, rent is expense and cash is an asset. Now, rent paid means expenses are going up. Okay, So when expenses are going up, what happens is you have to debit the rent account. Okay. Here, when you paid the rent, your cash balance is going down. So asset balance is going down. So you have to credit. So you have to credit the cash account. So rent account 6,000 and cash account 6,000. Okay, let's go and record this in the ledger accounts. Rent paid 6,000. So we have to credit the account. Okay, rent paid. Okay, 6,000. Now rent paid that has happened on 15th Jan 2025. 15th Jan 2025. Voucher number is 3. Okay, rent paid 6,000. And then we have to go and open up a new ledger account called rent account. Okay, debit and credit. Now 15th Jan 25, cash rent paid amount is 6,000 because we are debiting it. Now another thing to learn. Okay, another thing to learn. Then now rent account is usually expense account. Rent account එක කියන එක expense account එක. එතකොට අනිවාර්යෙන් rent account එකේ තියෙනුනේ සාමාන්‍යයෙන් debit balance එක. right? සාමාන්‍යයෙන් එකේ තියෙනුනේ debit balance එක. දැන් උදාහරණයක් විදිහට අපි ගමුකෝ bank loan account එක. bank loan account එක ඇවිල්ලා liability account එක. liability account එකේ සාමාන්‍යයෙන් තියෙනුනේ credit balance එක. right? furniture account එකත් furniture account එක සාමාන්‍යයෙන් asset account එකක්. ඒතර asset account එක සාමාන්‍යයෙන් තියෙනුනේ debit balance එක. right? Okay. Okay. 5th transaction completed. Okay, let's go to the 6th transaction. Okay. 6th transaction. Okay. Goods sold for cash 40,000. Goods sold for cash 40,000. Here we have two accounts, cash account and sales account. Now here cash is asset. Now cash balance is going up. Okay, cash balance is going up. So asset is going up. So we have to debit cash book. And on the other hand, sales is the income. Now here sales is going up. Okay, here sales is going up. When sales is going up, income is going up. So we are crediting the account, and account is sales account. Okay, so there we are debiting the cash account by 40,000 and crediting the sales account by 40,000. Let's go and record them in the ledger accounts. Okay, now here the date is 18th Jan 25. Receipt number is 03. Okay, receipt number is 03. Okay, receipt number is 03 and receipt number is 03 and it's goods sold for cash sales account. So 40,000. 40,000. Now here we are going and opening a sales account. Okay, 18th Jan 2025, cash book 40,000. Okay, because it's a credit entry. It's a credit entry. Then there is another transaction, cash received from a debtor, Pawan. Cash received from a debtor, Pawan. Now we have here also we have cash account. Okay, and we have debtor, Pawan. Debtor, Pawan. Okay, here what is happening is cash balance is going up as we receive cash and debtor balance is going down as debtor is making the payment. So cash is asset. Okay, cash is asset. Now cash balance is going up and asset balance is going up. And debtor, now debtors are assets. Okay, debtor කියන්නේ ණය ගැතිය කියන්නේ අපිට ලැබෙන්න තියෙන ආදායම. Okay, so debtors is asset. Sorry, අපිට ණය ගැතිය කියන්නේ අපේ වත්කම. Right? හැමතිස්සෙම ණය ගැතිය කියන්නේ අපි ළඟ තියෙන asset එක. So that asset, what is happening? Asset is coming down. So here, when asset balance is going up, we are debiting the cash book by how much cash we have received, 30,000. And then here, we are crediting the Pawan account also by 30,000. Okay, let's go and record them in the transactions in the ledger. So cash received from debtor Pawan. Okay, when is the date? 20th Jan 25. Pawan. Amount is 30,000. Okay, and then we are going and making a new account name Pawan. Pawan debtor. Okay, debit, credit. Now Pawan, so what is happening here? Cash received from Pawan, 30,000. Okay, so it's going down, so we have to credit it. Cash 30,000. Date is 20th Jan. Okay, so it's done. Okay, Pawan's transaction is also done. Okay. Okay, so we are moving on to the 8th transaction. Cash paid to creditor Surat, 34,000. Okay. Now here also we have two things. Surat, who is the creditor, okay, and cash. Here, Surat is a creditor. Now, when we pay to a creditor, it's coming down, and cash is a asset. Cash is also coming down when we making a payment. So when the liability, now Surat is a creditor, so here is a liability. When liability is coming down, we have to debit it. Now cash is an asset. When asset is coming down, we have to credit it. Okay, when asset is coming down, we have to credit it. So Surat, we have to debit it. Cash, we have to credit it. Okay, let's move on. Cash paid to creditor Surat. So I have paid cash. Okay, when 24th Jan 25 004. Cash paid to creditor Surat, 34,000. Surat, 34,000. Cash paid to Surat, 34,000. Okay. And on the other hand, Surat is a creditor. Okay. So ideally, Surat will have a credit balance. Now here we have made a payment. Okay, so it is coming down. Cash 2401, cash pay to Surat 34,000. Okay, so it's done. Okay, it's done. So we have completed that transaction. Okay. So next transaction is cash taken for personal use, 5,000. Cash taken for personal use, 5,000. So the transaction is cash taken for personal use, rupees 5,000. So we have two things. We have drawings account. Okay, we have drawings account and cash account again. Now here, what is happening is drawings are going up, cash is going down. Now drawings is like sort of a like equity account. So if the equity is going down, okay, so what we have to do, we have to debit it. And if cash is coming down, cash is asset. When asset is coming down, we have to credit it. So we have to debit drawings account by 5,000 and cash account by 5,000. Okay. So let's move on. We have to credit cash account by 5,000. Okay, 5,000 drawings account. When is this happened? 25th Jan 25. Okay, Then we will be making a new account named drawings account. Okay, debit and credit drawings account. Okay, so date is 25th, sorry, 25th Jan, cash account, and then drawings cash taken for personal use is 5,000. Okay, so that's how we do it. Okay, that's how we do it. And then we can moving on to move on to the to the other questions. Okay, so okay, so here we'll move on to the other question. So 10th. Okay, so interest income received 3,000. Interest income received 3,000. Now, interest income received 3,000. Here, what is happening is we have two accounts, cash book and interest income. Now, cash book, we are receiving the cash, so cash is going up. And interest income, we are receiving, interest income is also increasing. So, as cash is receiving, cash is increased, and cash is asset. When asset is increasing, we have to debit the asset account. So, we have to debit cash account by 3,000. Okay, we have to debit the cash account by 3,000. And on the other hand, interest income is an income account. So as income is increasing, we have to credit the interest income account by 3,000. Okay, so here interest income received. So cash account we have to debit, saying interest income. Okay, interest income 3,000. Okay, date is 26th Jan 2025. Okay, then we are going to make another account named interest income account, debit and credit, interest income account, interest income account. Okay, so date is 26 Jan 25. So we have received cash and amount is 3,000. Okay, so that's how. Okay, then we will be moving on to the final transaction, repayment of bank loan rupees 6,000. Repayment of bank loan rupees 6,000. Okay, the next transaction is repayment of bank loan rupees 6,000. So we have two accounts, bank loan account and cash book or cash account. Now here we are repaying bank loan. So bank loan is coming down. As we repay bank loan from cash, cash is also coming down. So bank loan is a liability. So when liability is coming down, we have to debit the bank loan by 6,000. And then cash book is an asset. If the asset is coming down, so then we have to credit it. So we are crediting the cash book by 6,000. So let's go to the cash book and bank loan account and then complete this. Okay. So it's 28 Jan 25. So bank loan, and we are paying 6,000. And then we are going to the bank loan account. I think we already made a bank loan account. Here we have the bank loan account. So we are paying it and it is coming down. So 28th Jan. So we are paid it from cash and amount is 6,000. Okay. So that's how. Okay. So with that, we have concluded almost 11 transactions: capital investment, purchasing goods for resale, obtaining bank loan, obtaining furniture, rental payments, goods sold, cash received from debtor, cash paid to creditors, cash taken for personal use, interest income received, and repayment of bank loan. Okay, so we have the answers here, and let's check it out. Okay, we will take a couple of minutes and let's see whether they are correct. Okay, let's see whether they are correct. So let's see. Okay, so we have in capital 80,000, it's correct. 50,000, it's correct. 40,000, it's correct. 30,000, it's correct. 3,000, it's correct. Purchases 40,000, 5,000, 8,000, 6,000, 34,000 drawings bank loan. Here, without writing the surat, they have written creditor. Okay. Here, I think they have written debitor. Okay, so you have to remember that. Then capital account, it's correct. Purchasers account, it's correct. Okay, capital account, it's correct. Purchasers account, it's correct. Bank loan account, it's correct. Okay, 2 entries. Furniture account, it's correct. Okay. Then rental expenses account, it's correct. Then sales account, it's correct. Okay, it's correct here. And then debtor Pawan account, Pawan debtor, it's 30,000, it's correct. Creditor Surat, 34,000, it's correct. Drawings account, 5,000, it's correct. Now the important thing is, now in your syllabus, you will have to, if they tell something like a drawing, you will have to make a separate drawings account. Okay, you cannot adjust it to the capital account. Rather, you will have to create a separate drawings account. Okay, and then interest income account, we have 300,000 credit. Okay, so with that, we have finished off that exercise. Okay, then we will be moving on to the balancing of accounts section.